All right, Ed, thank you very much. The time is 8 minutes past the hour. Let's get to our guest. It's Thomas Hayes, chairman of Great Hill Capital, with us for a great discussion. So, Thomas, before this coronavirus new variant, Omicron, hit, inflation was really the sort of front burner issue for investors. Let's talk a little bit about inflation. This Omicron, do you think it makes inflation worse because of additional bottlenecks in supply chains, or better because business will slow and retailers will have to cut prices to generate business?
Well, you don't want business to slow, Brian. That would be a big problem if you started to see factory shutdowns in Vietnam and a reemergence of the supply chain bottlenecks that are now started to get worked through. You have the two components. You have the supply chain that we're hopeful is temporary, and we're hopeful that this will be another variant that is just another blip that will power through. But then you have wages, which were happening before Omicron and that are sticky. So we are going to have above trend inflation, but that's not necessarily a bad thing. I do think these supply chain bottlenecks and Omicron will work through that over the next 3 to 6 to 9 months. That part will stop going up, but wages are going to remain elevated and give us above trend inflation for some time, and that's apparent in 5-year break-evens.
The very nature of a pandemic is that the virus mutates and we see new variants. Why has there been such a reaction to this?
That's a great question. Juliet, we came into the bad news on Friday morning here in the U.S. The market was a little bit overbought, a little bit frothy, but you also saw among retail investors, cash holdings fell to 46% of margin balances. That was the lowest reading back to 1997. So I think what you saw on Friday is a ton of retail, what they call stop-loss orders, were taken out during the shortened trading session, and the VIX hit 28, which over the past 6 months has been the level where the market bottomed and bounced multiple times. So I think it was just a positioning and a surprise news, and a lot of professionals were not at their desks on Friday.
Bloomberg Economics expects that the Fed could double the taper pace at the next meeting. Do you see a need for that?
Yeah, well, I think we're not going to have enough data on Omicron for another 2 to 2.5 weeks. So Chair Powell has been a steady hand at the wheel. His reappointment has comforted markets. I don't think he's going to be too aggressive to move until he has better and complete data on the variant. He can always, up it and call a meeting at any time to accelerate it. But for now, I think he wants to play the steady hand moving forward. And you have to keep in mind, whether it's accelerated or not, during that period, we're going to get another $600 billion plus of liquidity over that period. So even if you do see some rate hikes mid next year, the economy should have a nice glide speed with 9% earnings growth expected for 2022 and just increased business expansion, 4% GDP.
Many Fed watchers say watch what happens with unemployment rather than inflation to determine what the Fed does next. But I want you to settle something for me. Does inflation actually wreak more havoc than unemployment because it hits everyone and joblessness doesn't?
Yeah, inflation is taxation without legislation, so it's a tax on everybody. Unemployment, Chair Powell had really been focused on that. He moved quickly in November from the pressure from his colleagues, but his goal had been to get back to 3.5% unemployment, put that 1.5 million people back to work that were employed pre-pandemic, and that's always been his focus. But he is acutely aware of the impact of inflation on regular folks and their daily lives, and that tax that comes to them, whether it's milk or gasoline. Heating oil was a huge part of the component of that in recent prints. So I would see he's going to be balanced, he's going to be steady, but I don't see him accelerating here in December without having complete and accurate data on the variant. So leave it to Powell. He'll be a steady hand to guide us through.
All right. And when we look at market risks or opportunities in this period, we know we still need a little bit more time, as you've mentioned. But what are you looking at in terms of the industrial space? We know that travel restrictions are going to hurt a lot of these airlines. You're looking at Boeing being caught up in the headwinds of travel restrictions too, these short-term travel restrictions.
That's right. Boeing certainly caught up here. We do like industrials. Industrials as a sector is expected to grow 36% earnings growth next year. That's higher than any other sector. Tech is 9.7%. S&P is about 9%. And the big thing here, Dave Calhoun said on the Q3 earnings call, is he expects to get the China recertification on the 737 MAX before end of the year. The stock is not trading like that. So if that were to come, as he anticipates, that would be a huge positive surprise. They'd be able to take up their 737 MAX production from 19 per month right now up to 31 per month starting in Q1, and that would be a huge boon for the stock, for the company, and for the Dow Jones Industrial as a major component, and get some of these reopening and value trades that have lagged behind back on track moving forward as we get through this variant.
What are your thoughts at the moment for Chinese equities or Hong Kong listed equities, just basically in this part of the world, given all that's happened?
I think this is one of the greatest opportunities for 2022, and that is the most non-consensus view I think that you probably had on your show in a couple of months. And the reason I'll look at some of the data here, these 35 to 40% crashes happen every 3 to 4 years on the China MSCI. The average 12-month return following that magnitude of a crash is 30%. The average pre-China National Congress, which happens every 5 years, in the 12 months leading into the China National Congress, the MSCI China is up on average 31%. We expect that the government will ease policy into that China National Congress meeting next November. And we think that there's a tremendous amount of opportunity.
All right, there's always opportunity somewhere. Thomas, we thank you so much for your time. Thomas Hayes, Chairman of Great Hill Capital, on the line for us from New York City.